Thank you very much, Raina. 9:17 is the time. Let's talk winners and losers on Wall Street with financial expert Rob Black joining us this morning. And Rob, on this Monday morning as we look out, what are your thoughts? My thoughts go to China. I know that they've had a lot of difficulty with COVID. A lot of suppliers are shutting down factories, and that's having ripple effects for American companies, too. I caught wind of that over the weekend.
So strange because I just traveled and I didn't feel COVID in the United States. And yet we keep hearing these headlines, COVID in China.
Yeah.
And you're right, it's going to upset the supply chain. So oil prices are coming down today on your observations. Interest rates are moving higher on expectations of fighting inflation. Bad combination. 2022 is going to be one of those years that it's not going to look good probably until we see inflation crack. It'll be a lot of volatility, a lot of sideways to slightly down. We're moving into earnings season, and that can change things quickly. But last year we had easy comparisons. This year they're more difficult with higher interest rates and higher inflation for the corporations. So we're not looking for great earnings. For the year, we see the NASDAQ's down 12.3%. I love it because I'm still investing. I hate it because it feels gross. It feels bad to be down. S&P 500 is down 5.8%. Dow's down 4.4%. Saying there are less risky ways to invest. But of note, HBO Max kind of came public today. They were part of AT&T. They've spun that off. They're now Warner Brothers Discovery. It took me a second to figure that one out. So that's kind of exciting, but even all the streamers like Netflix and Apple and Disney, they've kind of lost their swagger in the stock market.
That's curious. Okay. I was just thinking ahead to our second topic. I had a friend of mine who I had dinner with the other night. He's a pilot for a regional airline, but he's being courted by Southwest, and he's going to go into their training program. And apparently, and Southwest isn't alone, but they're massively, I mean, they're desperate for pilots, for, flight crew members. They're really trying to ramp up, and they're having a hard time filling all these roles.
And yet demand's huge. Yeah. So I just traveled last week on a plane, and I can tell you that they're short-staffed. There's fingers crossed. It was fully packed plane. Service was the worst I've ever seen on a 5-hour flight. I'm okay with it because it's COVID time, so I'm not going to judge. But the hiring demand, some people just don't want to go back to work, James. And if they do, they want to get more money. And that's a combination for the airlines to struggle this summer. We have higher fuel, higher demand. Spending is above 2019 levels, which tells you that they're back. Now, again, those are higher ticket prices, not necessarily more tickets. But 85% of Americans want to travel this summer. 46% want to travel by air. There's going to be lots of cancellations. I would say book sooner than later and give yourself some kind of wiggle room for when you get back. COVID, staffing issues, not going to go away in the short term. Of note, Friday was the second most traveled day since the pandemic began. So we've got to take out one Thanksgiving. But yesterday Friday was a big day. 2.3 million people went through TSA.
Wow, that's a lot. All right, and then lastly, I know we're almost out of time, but let me try and squeeze this in. We've been talking about Tesla and Twitter and the fact that Elon Musk was expected to be announced as, joining the board there after he bought, all these shares of Twitter. But then over the weekend, the CEO of Twitter said, no, that's not going to happen. It was a little cryptic about what went down, but apparently Elon, in the end, decided he didn't want to join the board.
Yeah, let's talk about a lot real quick. Elon broke SEC rules. He's going to get fined for that. He accumulated over 5%. He didn't disclose it on time. He got a cheaper price after he announced the price. It's zopped up. So the Twitter board has to be nervous. He's already got a $20 million SEC fine for manipulating Twitter into a higher price for Tesla back in 2018. So this is not going to be a Cinderella takeover or a Cinderella dance with Twitter. He's talking a lot about $3 subscriptions, which would wipe out, everyone would be verified and wipe out advertising. It sounds pretty cool. But this looks a little more of a Game of Thrones play because by not being a director, he can accumulate more than 15%. By accumulating more than 15%, he could essentially do a hostile takeover and become, Lord Elon of the House Elon.
Oh, you think that might be his strategy, huh?
Yeah, he really likes the platform and he uses it to great advantage. Jack Dorsey even said so.
Yeah.
If he could, I don't think this is about free speech. I think this is about him being a maniacal person, not wanting to be censored. And again, maniacal in a good way, not in a bad way. But he's able to move Tesla stock billions of dollars by tweeting. Yeah. So he's very, very good at that. And I get his end game, so to speak, here.
Very interesting. All right, Rob, thank you, as always, giving us perspectives and angles we didn't think of on our own. If you want Rob to weigh in on a topic that's important to you, let him know. reach out to him on Facebook, Twitter. You have the handles there on the screen. You can email him directly, and we'll visit with him again tomorrow and see if he'll chat about it. We'll be right back.